So let's go over what a 2-1 buy down is and how it works. A 2-1 buy down reduces the interest rate for the first 2 years of a loan. In year 1, it's reduced by 2%, and in year 2, it's reduced by 1%. In year 3 and beyond, it goes back up to the note rate. How it's paid, the seller pays it in seller concessions. They actually pay the interest savings that are accumulated in year 1 and year 2 of the loan. Now there are pros and cons for both sides of the transaction, but this loan product is really meant to benefit both parties. The pros for the buyer side are that they get a reduced interest rate for the first 2 years. Monthly payments are thus reduced for the first 2 years. They can negotiate more seller concessions in order to get that lower interest rate and be able to purchase the property. The cons is that after the 2 years, we're hoping that interest rates will drop back down to the 4 or the 5% interest rate range, in which case you would want to refinance this loan to get more permanent financing in place. On the seller side, the pros are that there's no need to reduce the purchase price. This keeps home prices in the area the same. The seller may pay less out of pocket depending on how much closing costs they were going to cover in the first place, and this is a per transaction based analysis. And you could sell your home faster because you'll be able to offer interest rate reduction, which isn't widely available in the market. The cons is depending on, again, how much the seller was planning on contributing to seller concessions, they may have to increase those concessions. So let's go over an example. In this example, we'll do a purchase price of $400,000 with an interest rate or note rate at 6.403, APR 6.647. It's going to be a 30-year mortgage with a 5% down payment, so the loan amount will be $380,000. Looking at year 1, you can see that the interest rate is 4.403. In year 2, it's 5.403. And in year 3, it goes back up to the note rate of 6.403. Now in the rest of the table, you can see how the monthly payments are decreased in the first 2 years. You can also see the amount of total payments and the savings that a buyer will be able to receive in the first 2 years. The total of the yearly savings, so the $5,689.32 in year 1, and in year 2, the $2,917.68, those are what are going to be paid by seller concessions. So in total, a seller would pay $8,607 at closing to make this deal happen. Here's my contact information. If you would like to go over a specific scenario on a 2-1 buy down and also want to get up-to-date interest rates so you can see how much seller concessions would be needed, please go ahead and give me a call, send me an email, whatever makes it easier to get in contact with me, and I'm happy to go over specific scenarios with you. Thanks for watching, and we'll see you in the next one.